Hello everyone, I'm Chris Kapches, President Chestnut Park Real Estate, and today I'm going to be providing you with the October market report for Toronto and the greater surrounding area. In a bizarre way, this report is very similar to September's report, primarily because the performance of the market was very similar in both months. In October, we had 4,646 properties that were reported sold, whereas in September we had 4,631, almost indistinguishable. What is problematic is that the 4,646 properties that were reported sold in October are about 6% fewer than the 4,930 properties that were reported sold last October in 2022. And as we know, the market was not very robust a year ago. In preparation for this presentation, I went back and I pulled out a market report going back to 1996 and 1997 to compare numbers to see what October's numbers were like compared to what was happening almost 2 decades ago. And to put what I'm about to say into perspective, back in 1997, the population of the GTA was 4,355,000. Population currently is 6,372,000. So it has grown by about 47% over those years. Interestingly enough, if we applied a 47% increase in the number of sales that were actually achieved in October, we should be around 8,000. And 8,000 is actually more consistent with what was happening in the marketplace in October, before, of course, the Bank of Canada started implementing its punishing benchmark rates that have made affordability very difficult for most buyers. I also took a look at what was happening in 1996 and 1997 in terms of reported solds for the month of October. And in October 1996, 5,396 properties were reported sold, almost 1,000 more than this past October. And in October 1997, over 5,000 sales, 5,077 to be exact, were reported sold. So that gives you a kind of a historical perspective as to how the market has changed since the Bank of Canada increased its benchmark rate to 5% and has literally brought the resale market to a standstill. Now, what is amazing about this market is that I've just described to you how slow it is in terms of the number of reported sales. Yet, ironically enough, the average sale price has continued to strengthen over the last few months. That's a market anomaly. I mean, historically, when sales are down, your average sale price tends to come down. And again, I took a look at a historic perspective as to what has happened in the past when we've gone through a period of declining sales. And specifically, I looked between 1990 and 1995. And during that almost 6-year period, the average sale price dropped by about 30%, while sales continued to be slow during that period. That is what, candidly, as someone who analyzes the market regularly, I anticipated what would be happening, but in fact, it isn't the case. Average sale prices have strengthened, whereas sales volumes have declined. I think the explanation for that is that, and again, it relates a little bit to what I mentioned about population. There's a lot of people in the market. Unfortunately, most of them can't afford the properties that are out there because of the price point and the interest rates and the stress tests that they have to go through. But there are people, a smaller pool of them, that in fact can afford them. Sellers are holding their prices, And as a result of that, rather than see the average sale price decline, it has increased. In October, it came in at $1,125,000. That's for the entire GTA. That's for both freehold and condominium apartments. And as I said, that's for the entire GTA. That's quite a large region, 1,125,000, which is 3.5% higher than it was last year. So notwithstanding that the bank has increased its rate about 10 times since last year, the average sale price has managed to hold firm over that period. The going forward, that may not continue, because one of the things that we saw in October that is shifting away from what we were experiencing up until that month was the increase in inventory. In October, we had 19,540 properties available for sale. That's a 50% increase compared to October of 2022. It's a higher number. And if it continues, it's going to impact average sale prices, because clearly if there's more properties for buyers to look at, to make offers on, they're going to be sharpening their pencil. And again, because of affordability, we're probably going to see some erosion of that very strong average sale price that I mentioned. But that may not happen, and we'll have to see. I did want to mention again, my last historical comment is that even though 19,000 odd properties are a lot compared to what we've had over the last few years, especially through COVID. Again, going back to 1996, there was at that time over 23,000 properties available. And again, population not quite half of what it is today, had all that choice. So we've got a much larger population and comparatively a much smaller choice for buyers and consumers. So what do we anticipate going forward? I have some early data on November, and it's tracking almost identical to what was happening in October. So I anticipate the same thing will happen in November as we saw in October. A little over 4,000 properties reported sold. So what that does is it brings us to what's going to happen as we get to the end of the year. As of this point in time, the total number of properties reported sold is about 59,000. That is historically low, and I mean historically low for this time of the year. You can see from the chart on the screen that last year, very low, and 2018 was low. In 2018, something happened that caused it to be low. It was when the government implemented the Fair Housing Plan. They implemented the foreign buyers tax. They changed rent controls, and that had an immediate impact on the market. But the market recovered right away. The average sale price then was about $820,000. As I mentioned, it's currently $1,125,000. So that government intervention, as is generally the case with government intervention in the resale market, did absolutely nothing. It was political as opposed to being realistic. So looking forward, expect more of the same, a plateaued market with perhaps a little erosion on the average sale price, but perhaps not. There may be enough demand of those that can afford the properties that are on the market to keep the prices up there. And definitely that will continue into December, which means that on the whole, we'll be lucky to see for 2023, 70,000 properties reported sold. And as you saw from the chart, that's a pretty low number based on what we were accustomed to over the last decade or so. So I look forward to November, and I even look forward to December's results. At that point in time, we can do some forecasting as to what we anticipate will happen in 2024. So until then, stay well, and I look forward to providing that information to you. Thank you.